Hi guys. So today we're going to talk about Align Technology, ticker symbol ALGN. Okay, we're going to talk about their fundamentals, their financials. We're going to talk about their technical analysis, where they are right now, current price, and where we can expect to see them here in the future. So it's a growth stock. Now, what is Align? Now, if you've heard of Invisalign, it's essentially like they are in the healthcare sector and they create these invisible braces. Okay, and that's their own proprietary thing, and it's really really popular. Now their biggest market is America and China, so that's what they do. Okay, they're a relatively decently big company. They're not massive, right? They're not going to be in your triple billions, but they're also not in your 1 million, 2 million. Right now they're kind of at an average price of about $15 billion, and we're gonna look more into it. So if you're going to go ahead and invest in a stock, okay, if you're going to day trade it, it doesn't matter. You can, as long as there's no news, or if there's news, keep in mind, what's going on with that particular company in the day. If you're day trading it, it's easy. If you're going to swing trade something, if you're going to short term or long term invest in a company, it's always a good idea to look at their financials, okay? That's really, really important. If you can see positives in the most important aspects of the company every quarter, then you're going to be fine. Okay. So this is a growth stock, and it's a great stock to, keep an eye on. So here we are. Here are their earnings. Okay. Look at their earnings for their fiscal years. We have 2017, 18, and 19. Every single quarter, we are experiencing growth, right? And it's consistent, and that's what's important. We can see that the company is growing and growing and growing, and every single year, we're having a total increase in revenue. All right, that's a good sign. If the company is raking in money, that's important. And if it's raking in more money every single quarter, hey, that's a good sign. That's a green check. Okay, so we're on the NASDAQ, okay, and this is credible. And here we are, we're looking at their balance sheet and their financials, okay? So we can look at our assets, increasing over a period of the last, 3 to 4 years. Now, here's something that's really interesting. The bigger you become, okay, the bigger the company becomes, the more debt they're going to accrue over time, right? And also, their total liabilities are going to increase as well. The bigger you get, the more liabilities you're going to have. Look at this stock. $0 in long-term debt. $0. That's something. That's really interesting. And that's a really good sign because, if there's a recession in the near term, in the future, if there's a potential recession, Align isn't really going to get impacted that bad. They have zero debt. Interest rates, we don't need you. It's a good sign. Another green check. That's great. Okay. Assets increasing over time. Green check. Revenue increasing. Green check. That's fantastic. You know what? So far, I'm liking the company. Now, let's look at the consensus and let's look at our sentiment. Okay, what does the market think of the company and where are we going to go from here? So, as you can see, analysts are saying it's a buy, and I 100% believe it is. That's just personal. That's what I think. And in the 12-month price target range, now this is a forecast, okay? Right now we're trading at 180. We closed at $183.33 today. They're expecting in the next 12 months for the price to be around $270 a share, okay? That's interesting. That's a big gain, okay? And of course, it's just a forecast. Anything can happen. It could beat that, or it could honestly drop from where we are right now. We're going to talk about EPS. Well, we just talked about EPS, but we're going to talk about PE ratios and stuff here in a second, okay? So, FinViz. This is a really cool site if you're new to trading or you've been trading for a while and you want to set up a screener or you want to just look at individual sectors, look at companies in individual sectors and go from there. It offers a lot of information. Here we're on Align Tech, and we have a lot of information about the company right here, okay, on the first page. Great. So we can see that the market cap is right under shy of $15 billion, okay? It's a pretty decently big company with their income being about $417 million. Now, here's what I think is important. Their shortable option says yes. Now, if you use Thinkorswim, TOS, TD Ameritrade, that's what I have here in the back, on the top over here, it'll tell you during market open if a stock is ETB, HTB, or NTB. That means ETB means easy to borrow, NTB means you can borrow it, no to borrowing, and HTB means hard to borrow. Okay, so if a stock is hard to borrow, for example, Tesla, TSLA, ticker symbol TSLA, Tesla is hard to borrow because market consensus believes that the price of the stock is going to drop in the future. Therefore, there are a lot of people trying to short the stock. Okay, here we have ETB for Align, which means that there are a lot of shares that you can short because not a lot of people are expecting this thing to keep dropping. Okay, that's important. That should give you an idea of market sentiment is saying, hey, this is going up. If the hard numbers, which is the most important, say, hey, this is going up, then you can kind of create an idea of where you think the stock is going to go. Okay, and at the end of the day, it depends on what the market does. If the overall market, if you see the ES futures, you see SPY, you see that drop massively, then Align isn't going to stay up there either. It's going to follow the trend, right? So that's important to keep in mind. But in a steady market, we can see Align push up in value. Okay, cool. So over here we have the shares outstanding at 81.2 million, but the float is only 73, which essentially means that out of 81.2 million shares the company has offered, 73.1 million can be traded. The rest are owned by insiders or institutional investors like, hedge funds or banks. So, or, investors who got in on the ground floor when the company just went public. So here, FinViz has a target price is $263 in the next 12 months. Where are we at right now? $183.33. That's a pretty big gain. Now, how do you calculate market cap? Okay, this is how. You take the shares outstanding, 81.2 million, you multiply it by the current share price, and you'll get, in this case, 14.89 at $263. I've done the math here. They're expecting the company to be valued at $21.3 billion. Now, this isn't FinViz expecting it. These are different analysts expecting it, okay, to get to that price. A market cap of over 21 billion. That's a good sign, okay? Now, it has dropped. Now, this is just a yearly, I believe. It's a daily. So, it's dropped massively recently, and, is it like, has it found a bottom? Maybe, maybe not. But we're gonna keep looking at it. We're gonna get a better idea, okay? Here's the PE ratio. Now, a higher PE ratio essentially means that the company's poised for growth. And it's true because this is a growth stock, okay? In the past 10 years, it has grown tremendously. And, we're seeing an expectation here of, future growth too by a lot of people, a lot of important analysts, market. So that's really important. So, okay, now that we have our financials and our fundamentals in check, okay, the liabilities are there, but at the same time, there's no debt. That's important. We have an increase in current total assets. We're seeing revenue increase quarter by quarter, year per year. Okay, that's important. So let's look into the entirety of this, overall trend here. Okay. So if we're looking at it, just a general idea, we can see an uptrend. Okay, this is the 10-year weekly that we have on currently. This is a 10-year uptrend. Now, of course, if you bought the stock at around $9, you're going to expect a growth of literally over 1,000% to where we are now. Okay, that is something, literally 2,000%. I mean, good God, that's great. And it's a growth stock for a reason. Now, we can see that it made an all-time high at almost $400 a share. That is absolutely insane, okay? And then look what happened after. We had our earnings, it fell, and then of course, it regained some and then fell back again. Okay, so this is interesting. This price action is interesting. Let's go to the yearly. Here we are. Now, I have these two different circles, okay, for a reason. We're going to talk about it. These are small little gaps. Gaps can be formed in the market when you see a pretty decent change in price of an equity that happens after hours, okay? So we have earnings, okay? They actually made money. They did well on earnings here, okay? But I guess, not the investors out there expected a little more. And they may have also dropped their guidance a little bit. I'm not sure what happened here because this was last year in October. Okay, and it dropped about 19%, okay, to the next day. Now, here's the thing about gaps. 90% of the time, unless it's a penny stock, 90% of the time with, pretty well-known companies like Align, you're going to see a gap fill at some point in time. And maybe the next day, maybe a month from then, a year from then, it'll happen eventually. Let's look at it. It went ahead and filled that gap, okay, in March of this year. It took some time because we have to know this is a low volume stock. The average shares traded per day is about 1.2 million. Sorry, not billion. That'd be wild. So, it went ahead and filled that gap. Now look at this. This is the last earnings, and look at that, okay? Absolutely insane. In the last 4 or 3 quarters, look at that, $1.83 they've made per share that the company offers. That's pretty freaking crazy. That's good. So, okay, if they beat on revenue, okay, they beat all their numbers, why did the price of the stock drop? Okay, does that make sense? Yes, there are reasons. So here's what happened. Right now, the 2 biggest economies in the world are in a tariff war, okay? US and China are fighting it out and slapping tariffs on anything possible that is materialistic, okay? And now they're also starting a currency war. Anyway, so Align does major business in Chinese markets, okay? However, here's what happened. They beat their revenue, okay? They went ahead and made $600 million off of a consensus of 583, which is great. That's a beat. However, they are cautious. They know what's going on with the market. They know what's going on with China and the US. And since they make a lot of their money there, they went ahead and cautiously dropped their guidance for the next quarter, okay? For Q3, which is going to be in October of this year, down. Analysts were expecting, okay, hey, the company made 600 million beating expectations in Q2, so we're expecting you to make about 625 million in Q3. But Align said, you know what, with current conditions as they are, we are expecting a modest growth of 580 to 600 million dollars, which is about 25 to 50 million dollars off of what the analysts were expecting. At the end of the day, I think that if this trade war wasn't a thing, if it had either finished or never started to begin with, then we would have seen not only this push up, but potentially make a higher high, okay? Like in the last 9 to 10 years that this has been on the market, it has been growing consistently every year. It is a great stock. This is a very short-term trend. That's what I believe. This is a very short-term trend, okay? And in the next couple of years, we're potentially going to see a higher high. We're already expecting $263 per share, okay? It's also CNN business, okay? They're saying, okay, median is 264. The low they're expecting is 200, and the high is 320, right? Finviz is expecting about $263. And then NASDAQ is expecting 270. These are all great numbers, okay? That's important. That's definitely great. All right. So why do I think right now that this stock is going to push up here in the short term? Is it because of the gap fill? Maybe. But there's actually a little more to it. Let's go to openinsiders.com. Now you can, you don't have to be a member or anything. You can go ahead and just, type this in your browser and put your ticker in there and press search. Look at these filing dates. This is for the ticker Align. Okay. Look at this. The CEO, Joe Hogan, okay, Joseph, went ahead and bought about 5,000 shares, okay, at a price that is higher than what the shares are trading at currently. Of course, it's only 3%, of what he actually has, but still, he went ahead and bought shares. Now, CEO is buying shares of a company, a buyback, a $200 million buyback, okay? That's really interesting. That means the company is doing something really, really well for them to have that much confidence, okay? That's really good news. This happened here on the 6th of August, okay? All right. That's really, really interesting. Very cool. Now, what else do we have? Now, if you're not a member of Black Box, if you are, you know what this is. But if you're not a member of Black Box, you can go ahead to Black Box Stocks and you can join. They have like a free trial. It's a great community full of really talented people. And they have the software, which allows you to get a better understanding and an idea of what's going on, how to follow momentum on a daily basis, okay? So where you can make money, you know which direction the stock's heading in based on what people are buying and selling. Okay, so I want to go to the historical. I want to go to the 7th of this month. Okay, so we had a $200 million buyback. Okay, which means that now the company is buying $200 million worth of shares. Okay, $200 million worth of shares back from us because they're very confident. You have the CEO buying shares. Okay, interesting. Now look at this. All right, we've had some really choppy price action in the past couple of days. We're staying in the 180 range. We haven't pushed over it. We tried to push to 190. We weren't able to. Look at this. For the 16th of August, which are the monthlies, which is next week, okay? Look at this, 180 to 185 calls. These are block calls, which means these are single orders. One person bought 128K worth of options, and these are yellow. Yellow means that the volume exceeded the open interest on the day. That is very interesting. And these are on the ask. If you're buying options on the ask, you're really bullish in one of the two directions. These are calls, which means that they expect the price of the equity to be pushing up. Now that's interesting. Okay, you see the CEO buy shares, have a buyback program. You see that, with the market, Align's dropping a little bit. It's in this really, really good range to buy. If you're a growth investor, if you believe in the company, if you like what they're doing, if you like the numbers you're seeing on paper, then everything's green, right? Look at this. It's a potential to buy and hold for the long term. Now you look at these, over $1.3 million, okay, worth of call options for these strikes at this expiration were bought on this day. You don't ever really see flow. They consider this flow. You don't really see flow in Align because it's not a high volume stock. Something's going on here, okay? That's really interesting. Now, fast forward to today. We have two puts. These are sweeps, which means that this isn't one order. This is multiple people buying and then it accumulating to this price, okay? For these two dates, October expiration and August, 190 and 180 respective. These are hedges, okay? If you're going to see, you don't ever see flow like this. In low volume stocks, so many orders on the ask, are you kidding me? That's really bullish to the upside, right? So these are hedges against those calls. Look at what happened here today. These are DP prints. Dark pool prints are essentially insider transactions that usually happen after hours. People with deep pockets, they can buy, they buy it whatever price. Right here, they bought at 183.33, about $18 million, another $18 million worth of stock on the same day that there are hedges. What is a hedge? And now a hedge is essentially an insurance plan. If you're going long on a stock, you're going to buy shares, okay? Now, in case your plan goes south and the stock price drops, you want to have an insurance plan so you can mitigate your losses. So you hedge them with puts, with longer out of the money or in the money, but, out a couple months in expiry puts as an insurance plan. You see the CEO buying shares, $200 million in buyback. I'm repeating this because it's important, okay? You see calls in massive amounts be bought for the 16th expiration. You see hedges and then potential buys. We don't know if these are buys or sells. But with the current price of the stock compared to it on a macro scale, okay, with the block calls that came in with these hedges, that's really, really interesting, okay? That's something to keep in mind. So do I think that this is going to gap fill next week? Probably not. Maybe by November or December of this year, potentially, right? I'm already in with commons, which are shares, also known as shares, and I also have hedges and puts, and I have calls, okay, for November of this year. My exit range is anywhere between $230, okay, this is a Fibonacci, to about $240. If it wants to go to $250, that's great. What I'll probably do is I'll sell 75% of my position, and if it's 100% profit, then, I'm already just writing free YOLOs, and I'm going to see where that takes me. But this is what I see. These are all fibs I have, and this is, of course, the, all-time high. Not expecting that to beat that at any point in time with price action. We have a descending trend line right here, okay, and we're on the yearly. at the last high and the all-time high, right? And we can see that sloping down. Now, of course, depending on momentum, we can see it push higher. But right now, this is our ceiling. Okay, it's our temporary glass ceiling right now. And depending on how quickly we push up, we'll have that as a possible point of rejection. These dotted lines are just specific prices of resistances, right? Not massive resistances, but just where like the price is topped out on current days, okay? And then we have these long lines of Fibonacci's. Now, Fibonacci extensions and retracements, they're important to learn. We have two. You can see that there's a blend right here because we have one on the 10-year weekly and we have one on the 5-year, okay? And those essentially will give you a better understanding of price action per day, okay? So that's definitely something to keep in mind with where the stock is at. A lot of insider stuff going on under the hood currently. That's a little interesting to me. I'm already in a position, okay? If you create a position in this stock right here, always have a plan just in case things don't work out. Create a limit sell and create a stop loss. Create a trailing stop loss for your equities, for your options, in the order frame window, make sure that they're good till canceled instead of expiring on the day. So no matter what, you'll be fine. Because on a low volume stock like this, or relatively low volume, you're not going to see massive jumps unless it's, by news. You're not going to see massive daily jumps. So it's kind of one of those things where you create your position and you walk away. Remember, create your position if you like the financials, if you like the fundamentals, if you like the technical analysis, you believe that this stock is going to go up and away, in the near term, in the future, whatever. For me, I'm doing this as a swing, as a short-term swing. I'm ready to hold it for maybe a month, maybe 2 months, maybe 3 months, but I'm not interested after that. I would potentially like to sell before the next ER and then see what it does from there and then create another plan after. But if I like where things are going, we'll see. The future is speculative. We never have an idea of what's going on, but we looked at DP prints. Okay, we saw over almost $40 million worth of stock being bought after hours. Okay, we looked at the block calls that came in over $1.3 million on the 7th of August for next week's 180, 182.5, 185 calls. We saw 2 hedges, one for next week and one for October, 190 and 180 strikes. Okay, so with all that information, this is a line. Remember to only put your money in equities, in mutual funds, and ETFs that you feel confident in. Don't do it because someone else is doing it. Because I'm doing it doesn't mean it's a good deal. I could be wrong, right? That's why I have my trailing stop loss. That's why I have my limit sell. Only do it if you feel comfortable. And remember, if you're investing for the long term, make sure that the companies, the mutual funds, the ETFs that you put your money in have a solid foundation. That's important. Anyway, guys, that's my time. I'm probably going to go to bed now. So have a great rest of your weekend and see you on Monday.